Welcome back to the Dividend Diplomats YouTube channel. Got Lanny, Big L, Bert the Herd here. We are pumped to talk to all of you about another undervalued dividend stock to buy to maybe add to your portfolio.
And if you don't know the drill right now, give Bert a stone cold stunner, leg drop him on the mat, and then pin him 1, 2, 3. No,
you're assuming I stay down on the mat, Lanny. I don't just get up, pop up, give you the taker,
you give him the smash that subscribe button, give Bert the Hurt and Lanny a thumbs up. As Bert said, another undervalued, out of nowhere dividend stock to buy, Bert.
I know, it's crazy, right? We had one bad day over the week, and then the market rebounded, and the market continues to push those record highs that we saw earlier, and we've seen as a recurring theme over the last few weeks. But you know what? That's never going to stop us from searching for undervalued dividend growth stocks to buy. That's why we are so pumped to bring you another video about a stock that actually happens to be in our portfolios already. So Lanny, it may be time to add.
I know I sent out a message to a few of us in a group saying, is anybody having this company or this stock on their dividend stock watch list right now? Is anybody looking to buy? I heard crickets.
Yeah. You did, but then a week later, you start peeling back, you start looking back at some of those messages you need to respond to, but you didn't get a chance to. And once we started crunching the numbers and peeling back some of their earnings releases and other things, Lanny might have been onto something when he started this off. So that's why we decided to talk to you and record this video and share our thoughts and our research and get your opinions at the end of if you think this is an undervalued stock to buy.
And I know we all know about Monday, July 19th, and how the S&P 500 or the overall stock market dropped by about, what was it? Was it around 2%, Bert?
Yeah, it was the biggest drop in 8 months for the market, I believe.
Yeah.
Look where we are now. We're back, baby.
Yeah, what did it do here on the Tuesday, July 12th?
Bounced right back. The comeback good.
Yeah, back over 4,300 for the S&P 500. Which is why it's always fun finding another undervalued dividend stock to not only just buy or add to the watch list, but to talk about with you, the community.
Yeah, no, exactly, Lanny. So before we're getting ready to do the big reveal here, so what you're going to hear here, we're going to mention the company. We'll talk through some of their earnings release, some recent news that they've been in. And then what are we going to do, Lanny? What are we going to run them through?
The Dividend Diplomats Stock Screener. I'm giving them the old mellow three-peat right here.
Yeah,
the price earnings ratio less than the S&P 500 in the competition. The dividend payout ratio less than 60%, preferably in that sweet spot of 40 to 60%. Amber, we like to look at that dividend growth. Why?
Because we love to see our dividends increasing. The name of the game is making sure your income stream is growing because you want to live off that income stream. And as we all know now, everyone's watching the news, inflation's not a joke. Your costs rise, so we want to make sure your income is rising along with those costs and exceeding it so you don't lose purchasing power.
All right, Bert. So that was the stock screening metrics as always. The community wants to dive into this dividend stock. I think everybody should know who they are, and we'll list out some of the brands in the portfolio as well as some upcoming items. So Bert, who is this stock on the radar that you found?
We are heading into the media streaming arena, everybody. And it wasn't me that found it, Lanny. You tipped the conversation off, and we're now bringing this all together today to talk about the video. So you got to give credit where credit's due here. This company is Viacom CBS, ticker symbol VIAC. Lanny, you want to talk a little bit about Viacom's portfolio?
Well, if we don't remember, this was the combination of Viacom and CBS coming together. Shocker right there. And
they got really creative with the name, didn't they?
So creative, almost as creative as Warner Media Discovery.
Yeah, it does roll off the tongue a little bit better than Warner Media Discovery, though.
Yeah, I would say it rolls off much better. But some of the big brands, obviously CBS, think about all your sports, your news, etc. Country, music, television, Comedy Central, Nickelodeon, MTV. They own, Paramount is like the big movie, production company. Brands are so deep within Viacom CBS, it's not even funny.
Yeah, and what's cool about Viacom CBS and what makes them unique with some of the other servicing and streaming pieces, they've actually had two releases of different services. One, their free platform of Pluto TV, which kind of replicates the old cable feel, but what they were able to do there is utilize this media, this content library that Lanny was describing, put together a very specific channels for very niches, but allow people to go on for free and watch a lot of the shows that they remember from their childhood. I know there are a lot of channels that I've seen as I flip through it. They took their free one, they have their ads on there to get some revenue that way. But then they also just released Paramount Plus, that is going to be your more traditional streaming service that will battle Netflix, Disney Plus, Peacock, and all of the other big ones, Amazon Video too. So they are unique in that they have these two different massive streaming services to offer consumers.
And for those, think of Jack Ryan, all of those, that's Paramount right there. That's Paramount Plus doing that television series. And some of the big movies that are coming out, I mean, it's almost too easy to talk about. We all know Sonic the Hedgehog. That was like the last movie before the pandemic really hit hard. So that actually number 2 is coming out, I believe, in 2022.
Yep.
And Bro, what's one of your favorite movies that's coming up?
Just looking through this, I mean, some of the other big names getting released, obviously Top Gun Maverick, they're going to have another Top Gun. Everybody knows that. Everybody knows them, the Aviators, the franchise. That speaks for itself. But then they're also having another Scream movie coming out. And I've started seeing a lot of promos for it, the newest Jackass movie, too. Those guys are back. Everybody loves them. I know I loved watching them with a lot of my friends back in the day, too. So these aren't small names here that are getting released and getting ready to be put on these streaming services.
I was about to say, come on, Goose. Throw it back a little Top Gun name over.
Oh, there it is.
We're like, I'm more of the Iceman.
Yeah.
But yeah, some big movies really hitting the screen, especially now that you can get it on streaming or the big screen, kind of doing both. As we've seen Black Widow. Actually, A Quiet Place was one of the first big movies that Paramount released to theaters and to streaming. You got to respect that movie. Very good film.
Yeah. And they've been able to take a lot of this, and they built a lot of success in their last earnings release that they announced in May 6th. And just so everybody knows, too, they're getting ready to release earnings here at the beginning of August, too. So we'll see if they're able to continue some of this success. Just to rip through some of these things, they're quickly to get a high level. Their revenue grew year over year. It was up over 65% there, too. I mean, some of it came from boosting from ads because this year, I mean, some of it was pandemic induced why the growth was so large. You actually you didn't have an NCAA tournament last year, so they lost a lot of income last year, but it's back. And there's a lot of other pieces too, a lot of those other events, the Super Bowl, all those other good things that help push their revenue going forward too. And obviously one of their other big ones with that launch of Paramount Plus, they recorded a 69% year over year growth in your streaming subscription revenue. So you're starting to see the power of this new stream and this new piece to complement Pluto TV and that other service.
No, I mean, I couldn't agree more. I know you and I both know, but the community may not know. Viacom CBS was also caught up in the Wall Street bets movement back in the early part of the year. In fact, at one point, Viacom CBS, who currently trades at just over $40 per share, was actually over $100 per share back in March.
Yeah, they were one of the low-profile companies that were just caught up in this madness. You didn't realize it. It was quiet. Nobody was screaming that Viacom's caught up on the Reddit stream, but it came back down to reality after that was done. But now they're kind of at a more normalized level. The P ratio was not undervalued when they were at 100. That is for darn certain.
But I gotta bet my last dollar on that. But they are still up over 10% year to date, and they're actually up 65% since this time last year.
Yeah, exactly. And that's built on a lot of this revenue growth. The Paramount Plus is seeing some strong subscriber growth as well. They had 6 million new subscribers in Q1 2021. That puts them over 36 million new subscribers on here. And as we're seeing as Netflix, Disney, and all of these people, this subscriber growth is key for a lot of these companies to keep delivering the value.
Now, Bert, let's get into the Dividend Diplomats stock metrics. Hit them with that first big metric.
Yeah, so we're recording this on July 20th. So that's, keep in mind the closing stock price was $40.39. Average analyst estimates per Yahoo Finance is $4.03 for EPS. Calculate that out, crunch those numbers. That's a PE ratio of 10. 10. Not 1, not 2, not 3. I'm kidding, but 10. And that's huge in a market that has a PE ratio of over 45 on trailing earnings and over 20 on forward earnings as well. So it's a huge undervaluation in both metrics.
Yeah, and to give it a little bit of a frame of reference, what's a close one, a true close one? Would you say it's like maybe Comcast is maybe a pretty similar, ish?
Yeah, Lanny, I think Comcast would be an appropriate one considering that they have a similar portfolio. They have NBC, they have Peacock. I think that'd be a great comparison here.
Well, their forward price to earnings ratio, to give a frame of reference, is almost like 20 times forward earnings. So really almost half of the PE ratio that Comcast, the competition to Viacom, CBS, many other competitors out there, don't get me wrong, but definitely looks better amongst the competition.
Yeah, and I think now let's move into that second metric, the dividend payout ratio. Their annual dividend is 96 cents. You divide that by the $4.03 EPS, that gives you a payout ratio of 23.82%. Crushes our 60% threshold, and that's even below our perfect dividend payout ratio. So shareholders, be ready. There's plenty of room to grow that dividend if the company wants to, if the metrics and the cash flow is aligned.
Cash flow, earnings, safety, and the dividend. Gotta love it. Gotta know that typically it's like every couple of years they'll increase the dividend by a significant amount. So
yeah, I think that's a good segue, Lanny, if you want to speak a little bit to that third metric, to that dividend growth.
Third metric, dividend growth and dividend growth rate. When you actually look at what they pay out, per share per quarter over the course of time, really only have one consecutive year of an increase. And that's because they don't really increase it every single year, especially it's a new combined entity. But in the past, you really saw like every maybe 2 to 3 years a big increase. But over the average growth rate to the dividend, it's actually double digits with well over 10%.
Yeah, so I think that ties out to exactly what you're saying there. When they do increase it, it's a large increase, and they're not messing around with that when it comes to it.
Yeah, right. And I mean, to give another frame of reference, Viacom was paying 18 cents back at the end of 19, and then heading into 20, they announced a 24-cent dividend. So if you do the math, 6 divided by 18, you're looking at a nice 33% dividend increase. So again, you kind of look at it from like that picture, it's a pretty good growth.
Yeah, I would agree. So moving into our last metric and our bonus yield here, we always like to take a look at the yield once we get through the first three metrics. With that 96-cent dividend, that $40.39 share price, that gives you a dividend yield of 2.38%. So trading at a nice premium compared to the market. That is so much higher than the yield was when the price was over $100 a share, isn't it, Lanny?
Still a little bit, a couple basis points, right?
Yeah, throwing a few bips there.
Yeah, but now in summary, again, Viacom, CBS, ticker symbol VIAC, forward earnings, price to earnings ratio of only 10, a low dividend payout ratio, below 30, below 25% even. And then that average dividend growth rate is still in the double digits, though isn't seen possibly every single year.
Yeah, it's great. I mean, that you had then their dividend yield.
These are good.
They're showing signs of undervaluation. And what can you say? I mean, I think one other interesting rumor and thing that's getting filtered out through the rumor mill here, it's funny that you mentioned Comcast as a comparison earlier, Lanny, because as the streaming companies consolidate, everyone's looking to see what's the next Warner Media Discovery acquisition. Who's going to combine to compete with them, compete with Netflix, compete with Amazon? Viacom always comes up in the conversations, and a potential pairing with somebody like a Comcast also comes up as well. Interestingly, we're not saying any kind of merger or anything like that's happening, but the two of them are working on a potential deal to pair their content libraries and their streaming services internationally. Could it be a test for a future company, or both companies just looking for ways to keep unlocking new revenue and compete with these giants?
maybe AT&T will just buy them, and then 2 or 3 years later have an O.
Spin them off. I mean, they did just spin off this new DirecTV entity. They have some cash in that DirecTV entity, a DirecTV and Viacom CBS pairing. Who would have thought? Kidding.
Yeah, if that happens, run that way. No, I'm
Yeah.
kidding. Viacom CBS, strong undervalued dividend stock metrics. If you're a fan of any of those brands, definitely give this video a thumbs up. I mean, there's Nickelodeon. I mean, again, MTV, a lot of old, kind of iconic channels and brands that they have in their content portfolio. Content is king in the streaming world.
Yeah, and I also, a lot of people are looking for ways to maybe move into the streaming wars to buy a stock that's going to benefit from this new trend. If you're looking for undervalued, this might not be a bad option to consider, especially against some of those other larger tech companies that don't even pay a dividend. At least you're getting a nice 2.38% yield while getting into the streaming battles.
So let us know if you own Viacom CBS. Let us know if you don't own it, but now you're considering it based on our video. If you haven't already, definitely subscribe to our channel, as we are climbing our way to 10,000. We're only a few hundred away, which is nuts. Bert's getting ready for the ladder match. He's going to be climbing the top rung, and I'm going to sweet chin music him off of it.
Yeah, I went to Home Depot over the weekend and just started opening up all their ladders and seeing how fast I could climb up them.
You've been practicing, and I've been, honestly just practicing my Chris Benoit head smash off of the turnbuckle.
Hey, it was a hell of a move.
But, Bert, any parting words here?
No, again, if there are any other potential stocks you want us to cover in a video, let us know in the comments and we'll add it to the list. We love your suggestions, and we're building a list of videos that we're going to start knocking out with some of these dividend stock analyses. Lanny, I think it's time for you to send us off.
That was Bert the Hurt and Lanny from the Dividend Diplomats. Over and out.